Hey dreamers, you're gonna love today's video because it's chock full of all the changes I've made in the past several weeks and the results those changes have created. I wasn't gonna do another update for a while, but some of you have been asking for another portfolio snapshot, and there's a bunch of new subscribers as well. So today we'll go through the updated portfolio detail. I'll highlight what I've been buying and selling, show the new breakdown across geographies and sectors, and finally, show the total dividend income I'm generating now. Spoiler alert, it's above $78,000. You're going to love it. I know I do. And at the end, I'll give you some bonus content about how two of my investment companies actually saved my mom's life recently. So grab a cup of coffee or your favorite beverage and snack and settle in. Let's do this. Alright, so let's dive right in. Starting with my biggest position, it's none other than ticker symbol MO Ultria. Currently I have 3,386 shares, $179,639. The yield is currently 6.79 and it generates over $12,000 in annual income. Now I've added the sector and the geography so we can take a look at the diversification in a minute. But I've also added what quantity of shares I had just about 3 months ago when I last did a big update so that you can see the share change from that time until now. And I've also added whether or not the company is a dividend king, which means that they've paid out and increased their dividends for over 50 years, or a dividend aristocrat, which means they've paid out and increased for over 25 years, or a dividend contender, which is between 10 and 24 years of dividend increases. I've also added the Canadian equivalent of dividend aristocrat and the UK. So let's get started. All of that is just reference as we go through. So my next position is BCE. This is my favorite Canadian stock. I've got 2,586 shares, $136,826 worth. It's at a 5.39% yield and generates $7,374. The next one on the list is BTI. Now if you've been following me that I've been building this position up lately. Currently I'm at 2,846 shares for a total of $120,556 worth, an amazing current yield of 8.52, and that generates $10,000. And over here you can see I've increased the shares by 2,453 over the past 3 months. This is definitely my favorite UK stock, and it is a UK dividend king, which means it's maintained or increased its dividend every year since 2000. Moving on, we have ticker symbol T, none other than AT&T. I've currently got 4,965 shares, our current value just under $100,000. The yield is 5.59. It generates about $5,500 worth. And you can see the share change is just over 200 shares. Now, some of this is the WBD stock that I immediately sold and cashed in and then repurposed into AT&T stock right before the dividend X date. And even though it's no longer considered a US dividend aristocrat, we know that AT&T just cut their dividend. They're unlikely to make another dividend cut anytime soon and are currently much better positioned from a debt perspective to start to grow their business and the dividend again. The next one I have is IBM. I currently have 659 shares for a value of $88,000, a yield of 4.94, and it generates $4,352. I've been slowly adding to IBM as you know, I believe it's at the beginning of a nice turnaround. Philip Morris is the next one. I've got 732 shares, which represents $76,444 worth, a yield of 4.79, and generates $3,661. And whenever you see a small share change, that's likely just the dividends dripping and reinvesting all on their own. Ticker symbol O is the next one, Realty Income. I've got over 1,000 shares now of O, 1,089 shares, $73,412 worth, at a nice yield of 4.4 and generates $3,230. Now, as you know, Realty Income is a REIT, and I've been slowly adding to this position. Pfizer is next on the list. They are in an incredible position with not only the revenue they've made from the recent vaccine, but the technology underneath that vaccine opening up so many new innovations in the future. I'm very excited about Pfizer, not to mention the fact that they saved millions of lives. I can't think of a more worthwhile investment. I've got 1,309 shares, $65,000 worth, at a 3.2 yield, and generates just over $2,000 for me. Now here you can see that I've shaved some shares off recently, and everywhere that you see that, I'm simply rebalancing my position. Some of these positions have been reinvesting in themselves for a couple of years now, in addition to the price appreciation going higher and higher. So for some of these, I'm just rebalancing as I go. The next one is Chevron. I've got 347 shares, $58,000 worth, at a yield of 3.38, and it generates just under $2,000 in annual income. And this is another one where you can see I've shaved a little bit off in terms of number of shares. And again, I just want to point out that if you take a look at the recent price of some of these, for example, Chevron, you can start to see that over the past 10 years, it kind of stays within a certain band of price until recently, where it's completely shot up. My theory is that this is going to be a somewhat temporary increase, and so that's one of the reasons why I'm taking a little bit of profit off of the top. Still a long-term hold for me, but just rebalancing and taking price appreciation opportunity where I see it and rotating it into cash-generating vehicles. Okay, now going on to Verizon. I've got just under 1,000 shares with $47,858 worth, a yield of 5.31, and it generates just over $2,500. IIPR, a marijuana REIT. I've got almost 307 shares, $42,000 worth. This one has been beaten up lately, really from two sides. The real estate side and the financial side. It's at a nice 5% yield right now, and it generates just over $2,000 for me. Microsoft is the next one. I've got 160 shares, $41,847 worth. It has a yield of 0.95 and generates just under $400. Obviously not a big income generator, but more of a growth play. I shaved a little bit off just because I was reorganizing across a couple of different accounts. So not a big change. AbbVie is my next one at 266 shares, just over $40,000, 3.67 yield, generating just over $1,500. Now this was another one that I shaved quite a bit off of. The reason is when I looked at my positions last time, AbbVie had become the number 3 position in my portfolio. And that kind of shocked me. I didn't realize that it had become that big through reinvestments and price appreciation. So this was another one where I took a look at what had been going on with AbbVie and saw that recently there had been a pretty steep run up in price appreciation. And so I sold right about at the top before this recent dip. So once again, I haven't lost confidence in the company. There's still a significant holding in my portfolio. I'm just taking some of the opportunity to skim the cream off the top. Next, we have BNS, which is Bank of Nova Scotia. I've got 635 shares, almost $40,000 worth. It's got a nice 4.97 yield, kicking off 1983, and have just been adding a little bit here and there to BNS. BNS is a Canadian dividend aristocrat and definitely one of my favorites. Next, we have Duke, 297 shares, $32,000 worth, a 3.60 yield, generates $1,168. Now, I shaved a little bit off of Duke, and later you'll see also Southern Company. Once again, long-term holds, total conviction in these, but the share price of utilities lately has skyrocketed. So you can see here's Duke, and normally the price going up and down inside of this band, and then all of a sudden rising up way beyond. And that's about when I sold. So let's move on to SJR, Shaw Communications, a Canadian telecom company. I've got 1,034 shares, $27,789 worth. It's at a 3.39 yield and generates about $940. This recent sale was just me organizing in my account recently, but what I'm really hoping for and waiting for is that Rogers Shaw deal, which you can learn more about in my video, Stock Spinoffs and Mergers. Okay, moving on to STWD, that's Starwood. It's a REIT. I've got 1,168 shares, $27,000 worth. A nice 8.3 yield and generates $2,244. This one I haven't been adding to, so this is just 17 additional shares from drip reinvestment. You gotta love that. Now, I have rebalanced Starwood several times down because it just grows and grows, but you can start to see what happens when you have a really nice yield that just continues to reinvest. All right, now we have Ben, which is Franklin Resources. This is another one of my favorites. I've got over 1,000 shares, 1,065, $26,726 worth, yield of 4.62, and generates $1,234. I've just added a little bit of Ben as I go over time whenever I see dips in the market. And of course, Ben is a dividend aristocrat. So let's move on to the next one, which is Avgo. Avgo is a chip maker. Got 36 shares, $21,000. It's got a lower yield of 2.79 because it's more of a growth play. And the next one is MetLife. This is actually a sleeper hit. I like MetLife quite a bit, actually. I've got 324 shares at $20,600. Yield of 3.15, and it generates $649. The next one is J&J. I've got 110 shares, $19,000 worth, 2.56 yield, generating $500, and it might surprise you to see that I shaved off over 100 shares of J&J. There's really three reasons. One, you can start to see a trend where I've taken healthcare down. Pfizer, AbbVie, and now J&J. The reason is it was a bigger percentage of my portfolio than I really wanted to see. The second reason is as you look at J&J, they also experienced a little bit of a spike recently. And so I just took advantage of taking a little bit off the top. But the third reason is I'm a little bit concerned about the demerger that's going to happen with J&J. While I'm excited about the pharmaceutical side of the business, I have some questions around the consumer side of the business. It's not as profitable. There are some significant legal concerns, and I wonder what's going to happen to what has otherwise been an incredible stock for the past 50 years as we get closer to that demerger date. So for now, taking some of the volatility down and reinvesting it elsewhere. Moving on to CFG, I've got 469 shares, $17,793, 4.11 yield, and it generates $731. All right, moving on to MFC. MFC is another stock that I've been investing in lately. I've currently got 977 shares at $17,000 worth, a nice yield of 5.83, but I actually added a bunch during a recent day when it went all the way up to 6.2%. That was a nice pickup. So now it's generating just under $1,000 a year for me. And this is actually a brand new position since the February update, with all 977 shares being brand new. MFC is a Canadian aristocrat. So even though I don't expect a ton of growth from MFC, I'm hoping this is going to be another income-generating ballast in my portfolio, similar to BCE. Let's move on to the next one, which is STAG. 443 shares, $15,000 worth, 4.24 yield, generating $650. Next, we have 3M. I've got 101 shares, $15,000 worth, at a 3.99 yield, generates just over $600. Intel, a great chip maker, starting to actually invest in their product after years of no investment with brand new factories. Currently, I have 341 shares, just under $15,000 worth, 3.35 yield, and that gives me about $500. Now the next one is AQN, Algonquin Power. It's an electric utility company in Canada. This is another one I've been building up lately, and now I have just over 1,000 shares. So it represents $14,424 worth. It's at a nice 5.13 yield and gives me just over $700 a year. And AQN is a Canadian aristocrat. So next we have Sunoco. I've got 314 shares, almost $12,500 worth, an 8.36 yield, and it gives me about $1,000. Good. This is actually a monthly payer. It's a commercial REIT. I've got 597 shares at $11,558. The yield is 7.77, and it gives me about $900. Now here is Southern Company, a fantastic energy utility company in the Southeast US. I've got 147 shares, almost $11,000 worth, 3.69 yield, and it gives me about $400. And if you take a look at Southern Company, you can see a similar thing happen to Southern Company recently, where it normally goes up and down inside of this band, but recently shot way up, and this is about where I took a little bit of cream off the top. All right, so moving on, we have Pepsi. 61 shares of Pepsi, about $10,000 worth, 2.65 yield, and it gives me $283. Continuing on. So next we have a couple of UK stocks. The first one is JHG, which is a financial asset management company. I've got 356 shares, about $10,000 worth, 5.69 yield, and it gives me $556. We also have GlaxoSmithKline, GSK, 214 shares, about $9,300 worth, and it's got a 4.59 yield. And GSK is a UK dividend king. Moving on to Prudential, 91 shares of Prudential, $9,274, a good yield at 4.74, and it gives me $439. I've got 62 shares of Apple, just above $9,000 worth, and that gives me about $58. Texas Instruments, 51 shares, just over $8,000, 2.71 yield, and it kicks off $234. PSA, Public Storage, 25 shares, $8,000 worth, 2.51 yield, and just over $200 a year. Next we have ExxonMobil, almost 84 shares, $7,453 worth, and a 3.96 yield. I've got WPC, which is another commercial REIT, 87 shares, just over $7,000, 5.2 yield, and it generates almost $370. Next, we have several dividend kings. First is Target, 25 shares, $5,652, a 1.64 yield, and it generates just under $100. We've got FRT, which is a rare dividend king REIT. I've got 31 shares, just under $500, 3.69 yield, and it generates $178 a year. Procter & Gamble, 29 shares, $4,456 worth. It's got a 2.38 yield right now, and kicked off about $100. Next, we have Qualcomm, which is a dividend contender, 30 shares, just over $4,000, and a 2.22% yield. Next, we have Lowe's. I've got 20 shares, just over $4,000, 1.65 yield, and this, of course, is more of a growth play, only generating about $60. Canadian Imperial, this recently went through a 2-for-1 split, so very excited about that, because even though that doesn't really change the value of the stock, it does tend to generate a little bit of excitement around the company. So for Canadian Imperial, 67 shares, $3,580 worth, a nice 4.74 yield, and this is a Canadian dividend aristocrat. The next one is PFG. I've got 50 shares, $3,500 worth, and it generates about $130. Next we have Oracle, 49 shares, $3,500 worth, and 1.8 yield. I've got almost 110 shares of Getty, just under $3,000 worth, and it's got a yield of 6.2. UPS, a dividend contender, 15 shares, $2,728 worth, and a yield of 3.42, generating just under $100. I've been adding a little bit to TELUS. Now I have 102 shares, just under $2,500, 4.28 yield, and it generates about $100. EDF, 136 shares, $2,380 worth, and a 5.7 yield. Next we have Abbott Labs, 20 shares of Abbott, over $2,000, a 1.71 yield, and gives me $38. Devo, this is a new ETF position, which you can learn a little bit more about if you want to in my ETF video. 61 shares of Devo, just over $2,000, just over 5% yield, and it gives me $100 a year. I'm still testing the waters with Devo, and based on if I like it or not, I might be adding more. The only issue with Devo is that it's not a pure dividend play, so the taxes are a bit mixed. So that's something to keep in mind. Cisco Systems, 38 shares, under $2,000, a 3% yield, and generates $59. So all of the rest I have under $2,000 worth of shares. Let's go through them quickly. I've got 26 shares of Nextra Energy, 10 shares of NVIDIA, 5 shares of McKesson, which I really like, and is also a dividend contender. I've got 21 shares of General Mills, a couple of small positions in Vanguard product ETFs, just under $1,500 worth of BMY, Bristol Myers Squibb. I've got 27 shares of SBHD, just under 55 shares of ORI. I've really reduced the JP Morgan position all the way down to $1,000. And the reason for that was the same reason as all the other ones that I've been rebalancing. Essentially, I noticed a pretty significant steep ramp up, and I sold right before it started to cool off. But I still do like JP Morgan as a company. Their financials look really good to me, so I'm just hanging on to this last 1,000 and potentially will add back over time. Next, we have HIW, a live, work, play REIT. I've got 26 shares of that, about $1,000 worth of Discover, also about $1,000 worth of TD, Toronto Dominion, which is a Canadian aristocrat. I've got just about 7 shares of T Rowe, 6 shares of Genuine Parts, very small positions in VOO and VGT, 7 shares of Royal Bank, which is also a Canadian aristocrat. I've got 4 shares of Zoetis, an animal pharmaceutical, 10 shares of Cardinal Health, and to wrap up, a brand new position with BBN. And BBN is a bond ETF where I'm seeing the opposite opportunity. So here we can see the lowest it has been in the past, $18, at the very bottom of COVID, around the same. And then with the recent moves by the Fed, just an incredible drop. But then all of a sudden you can see the beginning of a tick up. So a beginning position for me of about $500. And to wrap up, Medtronic, 5 shares, SCHD, which is actually one of my favorite ETFs that I would like to continue to add to over time. And finally, Wells Fargo. And that brings us to the final total. With just over 30,000 shares, 30,882 shares, representing 1.5 million, $69,612, with a yield of just under 5% and a total dividend annual income of $78,255. Isn't that a beautiful thing? So there's a couple things I want to point out here. One of the things I wanted to point out is that if you stack the dividend aristocrats across the UK, Canada, the contender list from the US, the aristocrat list from the US, and the dividend king list from the US, essentially over 70% of my portfolio is invested in companies that have a solid track record of paying out and increasing dividends over the past 10, 20, and 50 years. And another way to look at it is by looking at what I call the long tail. So here you can see the breakdown of all of my stocks, with the top 3 positions being about 27%, which means the remaining 75% of my portfolio is in this long tail. And that's one way I diversify my portfolio. Another way I diversify is through the sectors. So here you can see how much I have in communication services, $313,000, $393,000 in consumer staples, $195,000 in information technology, $181,000 in financials, $168,000 in real estate, and $142,000 in healthcare, just as examples. Now, if you look across geographies, you can see that I'm about 70-30, 70% US and 30% in other places. Now, this is a little bit of a misnomer because a lot of my US companies are huge multinational companies, which in and of themselves means that they are diversified across geographies. Now, some of you may be thinking, okay, I like this portfolio overall. It's filled with low beta aristocrats, but there's just way too much sin stock in here from the same sector. And to that, I would say, I actually agree. My strategy over time is to have cash machines like MO and BTI give me income to spread to other investments and balance out. But for now, the inflation protection and steady flow of these assets are going to be great hiding places in a sideways market. Okay, I promised bonus content, and this is a story that could save your life or the life of someone you know. It's about my mom. One morning a few weeks ago after breakfast, she got an alert on her smartwatch. It told her that her heartbeat had been way too low for over 10 minutes, that this was not normal, and that she should call a doctor right away. Stunned, she called her doctor and they said to come to the ER immediately. Sure enough, her heart was down under 40 beats per minute consistently. They immediately pulled her into surgery and put in a pacemaker. Now she's fully okay, but guys, that day, her heart could have easily stopped when she was alone in her home. So I just want to say thank you from the bottom of my heart to Apple for the latest iWatch and to Medtronic for the pacemaker. It makes me feel amazing that in some small way, I'm supporting advancements that personally affect my life beyond just that income. See, investing can be rewarding in so many ways. Okay, guys, thanks for spending time with me today. As always, I encourage you to keep learning, implementing, and do your research. And as a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I will see you on the flip side.